Haven't read these books. Ray Dalio, How Countries Go Broke, and Andrew Ross Sorkin, 1929. These are two very good books, I think very relevant to what is happening right now as well. And again, if you do a little bit of research, it doesn't take much, look at our PE ratio on the S&P 500. Another really big red flag that I'm seeing as well is the fact that we're seeing very high government debt, right? So if we type in government debt to GDP ratio, right? And let's see if I can get, just for USA graph long term, right? You can see here that the debt has gotten really out of control. This is since 1970. 1966. It'd be great if we could actually go back further in this. But I mean, our government debt is about as high as it's ever been in all of history, at 118, right? So that means 118% of GDP is our debt, right? So this is typically how we measure indebtedness of a country. We do a ratio between the GDP and the actual amount of debt, because it's not just about how much debt you have, it's about what relative to what. Look at this, in 1980 we were at 30%. Today we're at 118%, 120%. It's coming down, which is nice, but that's probably also why we're seeing the market come down as well, because this is eventually going to have to stop. We're eventually going to have to bring down the debt. We're eventually going to have to do something about this, because eventually you just can't pay it, right? There's math involved here, right? Like if you're indebted this much by a country, you're going to have to pay this back at some point. You have to pay interest, and it does put a drag on the economy. If this keeps going up, it gets more and more expensive to maintain, and eventually you either are forced to reduce it, or there's a crack in the system and maybe the US dollar goes bye-bye. That's kind of happened throughout history. If you read this book, How Countries Go Broke, this has actually happened many times in history. It happened to the UK, it happened to the Netherlands, it happened to a bunch of other countries, that happened to Rome back in the day. It happened to a bunch of other world powers. So hopefully we're not heading in that direction, but it's not looking so hot, and it's making me think, hey, maybe we want to be investing in some stuff that is not going to explode if things go sideways, right? Which is why we're working on the strategy here, and we actually got a result. Cool. Let's see what result we got here. Okay, so we got our strategy here. This actually looks pretty damn good. It's buying TQQQ and it's buying put options. We got an annual return of about 30%, pretty damn good. Only a 66% drawdown. Very, very good here. I think it is real nice. This is a short back test, only about a month. Back test this back a year is what I'm going to say to the AI. So it's going to go back, and we're going to get a back test going back even further, and let's see if we get similar results. And this actually seems pretty good to me. This is a strategy that's buying put options, so it's going to protect us if the stock market falls, presumably. But let's see what happens in the back test. This actually looks very interesting to me so far, right? This is the kind of strategy that I'm thinking. I want to have a strategy that basically, if the stock market falls apart, we're still making money, right? That's kind of what I want. That's what I've been thinking about lately. Okay, and we're going to watch this back test go. So what do you think about that? Put it into the comments. Let me know. I respond to all of your comments, so I'm very interested to hear what you thought about the video and what do you want to see next. And of course, if you're interested in any of this stuff, go check it out at botspot.trade.